Hey everybody, welcome back to Actual Investing. Today I want to talk about PayPal. Now PayPal just reported their first quarter 2024 earnings this morning, April 30th, and I want to talk about what we're seeing because all in all this was pretty positive, if not somewhat expected. So PayPal has been implementing some cost-cutting measures, the biggest one being laying off 9% of their workforce. And a lot of times what happens is if a company is starting to see some headwinds, they're going to go into cost-cutting mode. They're going to reduce their expenses as much as possible and focus on improving their profitability during the tough times. But when things start to recover, in this case, when the economy begins to recover, they see the benefit of those cost-cutting measures twofold because they were planning for the worst, but when things start to improve, it improves even more quickly because they've already implemented these cost-cutting measures. So what we saw with PayPal was actually they had net income raise 20% year over year. So in first quarter of 2023, they had net income of $960 million, and now they have net income this quarter of almost 1.2 billion. So that's great, a 20% improvement in net income because of these cost-cutting measures and because they're not seeing quite the headwinds that they expected to see. So let me go back here. This is a summary that was made by someone called Stock Market Nerd, and I actually found this on StockTwits, which is an awful platform, but occasionally has some good info. And Stock Market Nerd apparently has put together all of the key points of this earnings report. So we're going to start here, but then we'll jump to the actual release and to my spreadsheet and talk about what I think of PayPal now after earnings. So PayPal, I believe, had been kind of left for dead. PayPal was one of the worst performing stocks in the NASDAQ last year in 2023. And when that starts to happen, the market prices in a lot of bad news. So when stocks are hitting lows, it's for a reason. It's because market sentiment is shifting. It's because the market doesn't believe in PayPal. So when PayPal starts to show any kind of traction that it's actually going to weather the storm quite well, that I think is going to start to reverse the market sentiment. So what we're looking at might be a reversal for PayPal. Maybe the bottom is in. I mean, that's being optimistic. Nobody really knows when the bottom's in. But hey, maybe the bottom's in. Maybe everybody was a little bit too negative about PayPal. Maybe everybody was being a bit too pessimistic. And now PayPal's showing, hey, we can cut costs. We can improve our net income. We can become this great value stock that the market is looking for. I think that's what we're seeing. So they beat revenue expectations and they beat their revenue guidance by about 2% and 3% respectively. They did raise their annual guidance for earnings. So a quick note about PayPal is that they're sort of in this interesting area where they're not a growth stock or a value stock. They're sort of in between. So they have about single-digit revenue growth. Their revenues grew about 9.4% year over year this quarter. And their earnings growth is actually higher than their revenue growth. So it's in this part of their journey where they're transitioning from a growth stock into a value stock. And this happens to all growth stocks. At a certain point, a growth stock has captured enough market share and has captured all the market share it think it can capture, and it's going to start shifting that focus from revenue growth to bottom line earnings growth. And that is what PayPal is doing. So with that said, it's wonderful to see that net income is also going up. So one thing that I did note this morning is that for their fiscal year 2024, they're actually showing a lower earnings per share than the year prior. However, this is a GAAP figure. On a non-GAAP basis, their earnings are actually expected to be, they say, mid to high single-digit % higher. So why is that so different? So non-GAAP is a bit more flexible. So GAAP has to include these one-time, one-off transactions, whereas non-GAAP is often a bit better indicator of what's actually going on at the company. They can exclude one-offs and look more at the bigger picture. So if you exclude one-time transactions, PayPal's earnings are still rising. They say at a mid to high single-digit %. Okay, that's not too bad. I think the market was probably expecting that. I think what they weren't expecting was such great net income growth and great margin expansion. We can see their operating margins have increased as well. So last year, operating margins were 14.2%. This year, they're 15.2%. So operating margins have expanded an extra %, which is great to see. Like I said, revenues are growing at about 9%. Payment volume is growing still at double digits, which is great. The only thing that really I noticed that was down was this active accounts. So in Q1 2024, active accounts decreased year over year by 1%, but it says on a sequential basis, active accounts actually increased 0.4% or by 2 million. So even though it's down year over year, it's up quarter over quarter. So that's interesting to see. The thing to note about PayPal is that this active accounts metrics is becoming less and less important. At this point, everybody who is going to use PayPal has probably already started using PayPal. They've already captured a lot of market share. There's really not going to be too many people who haven't heard of PayPal, so active accounts is not really expected to grow too much. What PayPal's new strategy is to milk these active accounts and to get more money out of each user. So that's something known as ARPU, or average revenue per user. What they're going to try to do is, instead of trying to capture new customers, they're going to capture more income from their current customers, which I think is a great strategy. There's no point going out and targeting all these old ladies and trying to get them to use PayPal, because there's really not too many people out there who are not using PayPal. So that is the only thing that I think would be a negative, but realistically, that's to be expected. At a certain point, there's just not going to be that many people who haven't used PayPal that they can go out and capture. Balance sheet is still very strong, cash and equivalents of $17.7 billion with debt of $11 billion. So that's a nice healthy balance sheet. If they wanted to, they could continue to make acquisitions. They actually just spun off an acquisition called Happy Returns. It's a labelless return shipping and logistics company. They just spun that off and sold that to UPS. So that improves their balance sheet as well. And finally, PayPal returned $1.5 billion to stockholders by repurchasing 25 million shares of common stock. So again, that's another characteristic of a value stock as opposed to a growth stock. So a growth stock is going to use its cash, its capital to grow, whereas a value stock is going to return that capital to shareholders in the form of stock buybacks, where they repurchase their own shares, which is going to make each shareholder now own a bigger portion of the company, right? It's the opposite of dilution. Or they're going to pay out their cash in the form of a dividend. So dividends and buybacks are the ways that value stocks return capital to shareholders, and PayPal is doing the latter, the buybacks. So if we look over here, this is macro trends. This is a chart of PayPal's shares outstanding. Their shares outstanding, we can see, is on a gradual downtrend. That is awesome to see. So that means if you're a long-term PayPal shareholder, the more that time goes on, the bigger of a slice of pie you have of PayPal, the company. If there's fewer shares outstanding, your shares are going to be worth more, right? That's just intuitive. If you hold one share and there's, let's say, this is just an example. Let's say there's 1 billion shares. You own 1/1 billionth of PayPal. But if there's only 500 million shares, wow, you just now own twice as much PayPal while still only owning one share. That's a very layman example, but you see what I'm getting at, right? As they're buying back shares, they are returning that capital to shareholders. And I love to see that. That's really nice to see, especially with a company like PayPal that is quite profitable and is done capturing market share. So finally, let's go to my spreadsheet. So this is my disruptive growth stock spreadsheet. I kind of just use it for any type of growth stock. It doesn't work as well for value stocks. But we see that PayPal is just above average. So this spreadsheet rates stocks on 4 factors. It's revenues, valuation, which is price to annualized sales, gross margins, and growth. So on each of those 4 factors, you can get a score out of 5 for a total possible score out of 20. The average for me is about a 12, which makes sense, right? That's 3, a score of 3 for each factor. So here's PayPal prior to the earnings report, and here's PayPal after the earnings report. So their growth accelerated from 8.8% year over year to 9.4%. So that's nice to see, a little tiny acceleration. And obviously revenues are growing, so their valuation has shrunk just a tiny bit, but all in all, still in line with how it was before, still gets the same score of 12.5 on my spreadsheet, which again is above average. So PayPal, why do I like PayPal stock and what am I doing? So PayPal is currently my 3rd largest position. I like PayPal because it gets me exposure to 2 things that I'm bullish on. One is e-commerce. So PayPal is used by a lot of small businesses to process their e-commerce transactions. PayPal is used for a lot of peer-to-peer sites. Think about eBay. PayPal is actually spun off from eBay. It also gets exposure to the global payments market. So either peer-to-peer payments, whether that's Venmo, which they are still looking to monetize more, or whether that is paying a business. Internationally, I was in England last year, and I went to sort of an outdoor market, and a lot of vendors were using what kind of looked like a little Square terminal, but it was actually powered by PayPal. I saw that happen probably 3 or 4 times, where you can go and tap your card. Even though I'm from the US, it processed just like normal, despite being in the UK, and I was able to pay. And I looked at my credit card statement, and that payment provider was powered by PayPal. So PayPal has set its roots all over the world, and I think that's really exciting that you can get international payments exposure with PayPal as well. There's also some interesting things with PayPal still to come, such as buy now, pay later, which I'm still not sure how disruptive buy now, pay later is. I think it's going to become a bigger part of the Gen Z and millennial culture, which I myself am part of that generation. I believe that if people can break up their purchases over time and pay very little interest, they're going to. And unfortunately, people my age are very bad with credit, so that likely means that they're not going to pay it and they're going to have to pay PayPal some interest, which, I don't love that business model, but that may be a growth driver for PayPal down the road. And there's also crypto. We know that PayPal is very crypto friendly. PayPal has its own stable coin, which is PayPal USD. So as crypto grows, perhaps PayPal can look to capitalize on that as well. So those are some more speculative growth prospects in buy now, pay later and crypto. But for now, we see a profitable payment processing business that is continuing to grow revenues, continuing to grow earnings, continuing to improve their margins, that has been left for dead with a price to annualized sales of around 2.5, let's say. So this is a very cheap company with what I believe is a bright future that has been kind of left for dead. So I like PayPal. I'm going to be holding my PayPal shares. It looks like they're up. It was 7%. Now it's like 5% this morning. So that's not enough to sway me to make any action on PayPal, whether it's buy or sell. I'm kind of holding this for the long run, and I continue to be bullish on PayPal and excited for the future. So I hope you enjoyed this quick earnings update. Anyway, thank you guys so much for watching. I do have a few subscriber suggestions coming up. One of them is Symbotic, one of them is FICO. But if you have any other suggestions on stocks I should cover, please leave them down below, and I'll do my best to get to them as quickly as possible. Please like the video if you enjoyed it, and please subscribe if you have not. Thanks so much for watching, and I hope you have an awesome day.